Hey, what's up everyone? Welcome back to the XForceGlobal channel. Thank you very much for joining me here today. We're going to be discussing the Elliott wave counts for Bitcoin, see where we left off from our previous analysis. And since our last analysis, Bitcoin has broken down and it is now reducing the probabilities of some of the scenarios that I did discuss. But I'm here to make sure to discuss what other scenarios can be arising from that current drop that we had. So let's get into it. Right now, we're still working in what could be possibly a larger corrective move of the macro scale. In the macro time frame, that's the most important thing that we have to take into consideration. Again, we have that 200 moving average that I've been discussing for the 1 day time frame. If you haven't seen that video, go back and see my macro analysis. I think it was 2 videos ago. But for the time being right now, what we're looking at is a possible ABC completion. Now, this is possibly the only simple way that we can be counting it, but it does get more complex because this move here still is a bit tricky in terms of the ranges because we have a larger range here and we have a smaller range here, and that gives us a little bit of off proportion in terms of what an impulse could be looking like, and is it going to be part of a transitional wave if we're seeing this as a corrective wave. But there is one possible corrective or actionary and reactionary wave pattern that we can implement into this possible wave C, which is going to be the idea of an ending expanding diagonal. Now, I'm not sure if anyone else is able to provide this idea, but here it is. I think the only way that I could possibly see this, if we're going to be implementing both the idea of having a wave C and some kind of overall directional kind of confluence, is the idea of the ending expanding diagonal. Now, what we have here is a possible ABC going into a wave 1, a 3 wave into a wave 2, and this move here is a larger collective wave 3 or the subwave 3 of this diagonal. And then this here is a pretty textbook ABC up into that subwave 4. And then we're looking for that final conclusion for that wave 5 that is going to be concluding our wave C at the area of interest and that liquidity zone where that first area of interest is going to be. Otherwise, we're going to be seeing a more bearish scenario that's going to be leading us into a larger area of interest. Now, for this idea, for this ABC, we're going to be looking for a conclusion either way. This is possibly the last resort for any bullish scenario, but for the time being, what we have is possibly on the larger macro scale, a larger ABC being created for a larger wave 3-4. So the idea of the wave 3-4 is still being implemented, but it's just now being turned into a more narrowed down scenario. So for this idea, I am kind of glad that we did have this sharp move to the downside because it is now giving us a little bit of conclusion in terms of how we can be seeing this ABC. So this ABC, like I've said, is going to be in the fashion of an ending expanding diagonal. Now, the problem here for this idea specifically is that we have to be neutral because the ending expanding diagonal or expanding diagonals in general is that you usually want to see the subwave 4 entering the price territory of wave 1. Now, that doesn't have to be necessarily perfect true because the new rules and guidelines associated with the Elliott wave international or the Elliott wave principle is that wave 4 does not have to enter the price territory of wave 1. Now, that's according to the new rules and guidelines I've mentioned. So if that's the case, this is deemed as accepted, right? Because of market inefficiencies. Now, that is one thing that I do kind of appreciate in terms of what they're trying to do and revising their overall rules and guidelines is the fact that you don't have to have wave 4 entering the price territory of wave 1. It's more of a tendency now, and I think that if we have wave 4 not entering that price territory, it does reduce the probability. However, due to the nature of these strong overlaps, I do believe that this can also be fitted as an ending expanding diagonal variation. Now, what we're going to be looking for in terms of the resolution for this final 5th subwave is that we're looking for another idealized zigzag because that is going to be the final 3-wave move to the downside. Remember, diagonals in nature all have to be fitted as 3-wave moves. So if that's the case, that's the same thing for expanding diagonals, both leading and expanding ending diagonals. So we're looking for another ABC to the downside. This was highly impulsive. That could be fitted as the first actionary wave of this wave A. We're looking for another corrective move to the upside before another move to the downside that will break this previous low. But if saved and we do get another move out of here in a 5-way fashion, that can be fitted as the final move of this larger ABC. Now, if that's not the case, what other variations can we pull out of this? Now, the second scenario for this this idea is that we have this very subjective top here for this wave 2. Now we can put the termination of wave B here and alternatively say that maybe that previous exchanges or other exchanges didn't break this previous top, which it hasn't done here for the Coinbase chart, is that we can label this as a very deep wave 2 that deems it still as valid. Now, I don't like this idea particularly, but it does have the right look because we do have the utilization of ranges here. Now, if that's the case, we're looking for this move here as the wave 3. Now, this is best fitted as the wave 3. We can alternatively label this as the wave 3 here and have this labeled as a wave 4 and just shift the wave counts here. However, I do seem to have a little bit of difficulty finding 5 waves into this move here. This does look like it's part of rather a 5 wave or a 3 going into a larger extended wave 3, which means that we do have another leading expanding diagonal here. We have a complex structure here for wave 2, and then we have 1, 2, 3, 4, 5 into that wave 3. This is now utilized as the internal wave 4 of the smallest degree, and now this is the final completed move, as that whole move is a 5 wave move that is giving us that completion of the larger wave 3. So if that's the case, that is going to be our wave 3. We're going to be expecting that same bounce and then another 5-wave move to the downside, which should be very similar in fashion that we're going to be looking for this possible move as well for the ending expanding diagonal for that wave C. So we have 2 options here. As you can see, we have the same end goal pretty much for that wave C. So we're looking for the completion of a larger ABC on the macro that still is going to be fitting in that narrative of that wave 3, 4, and then we're going to be looking for further upside. Now, this is still a little bit tough to take in. It's a tough pill to swallow because move to the downside doesn't look the best as always. They are not friendly to us. This is where the most fights occur. So to me personally, I think that we are looking for some conclusion still for a larger wave 3, 4. Otherwise, we're going to have to resort to a larger bearish structure. So in my opinion, I think that is the overall case. Now, I did mention a possibility of a triangle being built here, but it is quite unlikely at this point. However, it is still valid if we force in some internal counts. I did have this as a possible complex structure of a WXY, but interestingly enough, this can be fitted as an ABC where the B wave was fitted as a larger triangle. But again, it doesn't really matter. We could still fit this as an ABC where we have the 1, 2, 3, 4, 5, but that impulse doesn't seem like it's likely. But at this point with the readjusted count, we can have this as an ABC of a triangle, and that could be fitted as a simple idealized zigzag. Now, the problem here again is going to be this zigzag here. Now, I've mentioned in a use case study that we can see extended wave A's and have short wave C's. So this is not really a problem in itself in terms of the inefficiencies, but the inefficiency starts to lie in here because we have to now fit this as a part of an internal transitional wave for a wave C of a triangle. So the only way I can do that is having this fitted as an A, B, where we originally had this as a 1, 2, we now fit that as a wave AB, and then have this as the impulsive structure that we were looking for this to be the wave 3, and have that as the final wave C being the conclusion for this. So this is pretty much at the absolute peak maximum valuation of this probability of this triangle, especially for this wave C. So again, I mean, I guess it's very possible we could be looking for that wave subwave D to the upside, but we're going to be looking for another radical move to the upside in a 3-wave fashion that is going to be creating another extreme wild range, and then we're going to be looking for another move to the downside for a wave E before we move out of here. So it's a matter of if, not a matter of if, but a matter of when. If this is going to be bouncing now, this triangle idea is still extremely valid. However, for now, we still have this idea that we can be cushioning on if it does move lower into the area of interest and that liquidity. So that A, B, C is the idea that we want to be ideally looking at for a possible conclusion for this wave C. So if that's the case, it's really about whether you are accepting this move here as the impulse, or if you're seeing this still as corrective move in nature. The best way that we can fit, because the first beginning move, we didn't see any real actionary wave being created. So to me, still, we do have the pros and cons, but to the major pro for this is that we do have the first fitting structure as a wave one, subwave one as a zigzag. We have another wave two. This move here was very corrective in nature, and we can utilize this as a subwave three. And then we have another ABC, and we're looking for another ABC to the downside. But alternatively, like I've said, we can still end in the same zone if we're still fitting this move as the 1, 2, 3, 4, 5. So overall, those are the counts that we want to be looking for. We do have a larger bearish option as well, which is the possible idea where we are looking into an actionary wave, where we're utilizing this as the beginning of something now. That is now leading us into a 1, 2, 3, 4, 5 of a wave one, and then a 2 idea. Now we do have the other idea where I did also mention that we could be working in some kind of diagonal idea into a wave one, this being the wave two, and then we can utilize this as a WXY into that wave two. And then this could be the same idea where this is leading us into a wave 1, 2, and then move to the downside. But again, that's all pretty much the same idea. The bearish option still remains whether you want to see this as the truncated top, or you want to see this into the wave 1, 2 idea where we're already working in that 1, 2, but really it doesn't matter at this point. It's just how you are prioritizing your scenarios. So again, to summarize, we still have that triangle validation, not the best looking internal subwave count, and then we have the first bearish option, which is a little bit of a bearish pressure in terms of looking for a conclusion for a wave C for that wave 5 of that ending expanding diagonal. And now we're looking for a wave 1, 2, 3, 4, 5 to complete up for wave C. Hopefully that was helpful, ladies and gentlemen. I'm going to keep it quick. Thank you very much for joining. If you're not already in my XForceGlobal Discord membership, I'll give all my timely updates in the group as well. If you're not following me on X, please do give me a follow at XForceGlobal. Thank you very much. I'll see you guys in the next video. Bye-bye.